We're back on Morning Movers. We will get a good look at the home improvement trade when Home Depot reports earnings tomorrow morning before the opening bell. Analysts are expecting EPS to come in at $3.60 a share on an adjusted basis on revenue of more than $39 billion for the quarter. Shares are down 2% so far in 2025, but up 9% over the past 12 months. Time now for Options Corner. Joining us to take a deeper look at Home Depot is Rick Ducat, lead market technician here on Schwab Network. Good Monday morning to you, Rick. All right, let's start out with the trends that you're paying attention to when it comes to the chart for Home Depot.
Home Depot mostly in line with the S&P 500 as of now, both up almost 13% on the year, but underperforming the consumer discretionary sector of which it is a member here. So if we were to consider our candle chart here, we can see that for now, this downward sloping trend line beginning with these highs near 439 are still in play. We can see that we are right about at that level. We're also at this red line here, 382, that lines up with this series of lows, and then that's about where we have hit some resistance so far. Not really too much help in the pre-market yet either to push above this key level. We can also see our moving averages. Yellow 21-day, orange 63-day, purple 252-day, clustering together, suggesting lack of strong trend direction here. RSI still bullish, still above the 50 midline. This gives us a convenient support point as well as a gap level to watch here near about 365 or so to the downside. If we were to look at volume profile, we can see the point of control right about here. The area of heaviest trading is about where we had our gap to the upside. So this is also a further supportive area to consider, 362 to 365.
Okay, 362 to 365 support area to consider. Anything else that you're noticing when it comes to the chart for Home Depot?
Well, if we were to keep moving upward, volume starts to pick up again right in this area near 393 or 395 around that general point, which is also our linear regression line, our line of best fit based on closing prices, which is a notion of fair value. This could be the upside area to keep an eye on.
Okay, upside area to keep an eye on there when it comes to Home Depot. Thanks, Rick. Now, take us through an example trade. We've got Tom White, senior options contributor and a host of Fast Market. All right, Tom, so how would you set up an example trade for Home Depot, given that we've got earnings in front of us?
Well, I think you have to look at implied volatility levels in the overall market, which have come down pretty precipitously. Now, we're starting to see a rebound today on the pullback in stocks, but the IV percentile rank in Home Depot going into the earnings is only about 33%. So it's in the bottom 1/3 that we've seen as far as levels in volatility over the last 52 weeks. So I'm taking that into context with this example trade here in Home Depot. The option market's pricing in just a plus or minus 4% move either way in the shares post this earnings tomorrow morning. So I'm looking at it that way where, hey, here's a $377 stock. That's where it's going to open up here, down a few bucks from Friday's close, where I can do a strategy where I think, hey, implied volatility levels are low. Let's look at a strategy that if you think it's going to move more than that one standard deviation that the option market's priced in, this takes advantage of it. So going out to that May 23rd weekly expiration, which is just 4 days away, we're going to buy an Iron Condor here, where I'm going to buy an out-of-the-money put vertical. We'll buy the 365 puts, sell the 360 puts, and then on the call side, out of the money to the upside, we're going to buy the 395 call, sell the 400 strike call. So this is not a neutral strategy. This is a need a move type of strategy where, hey, you think over the next 4 days, the stock's going to move more than 4% either way. So if I pay a debit of about $2.20 for this $5 wide Iron Condor that I'm purchasing, that's going to be my risk, $220 per spread. Potential max gain is about $280, but that's below 360 on the upside and above 400 on the upside. 360 on the downside. Break evens on this one, 362.80 on the downside. I needed to go below there, or I needed to go above 397.20 to the upside. That's where you start getting that max profitability on this trade. So with those low implied volatility levels, the market not expecting much from Home Depot. Now, earnings are tomorrow morning, but I've still got 3.5 days after that earnings event to get the move that I need in this type of strategy. So if you think this stock's going to move either to the upside or the downside, you don't have to pick which one. You just want it to move either way more than that one standard deviation the option market's pricing in.
Need a move type of strategy there for the example trade for Home Depot. Thanks, Tom.
Thanks.
I got shares of Home Depot under some pressure in the pre-market ahead of earnings tomorrow morning.